Hello everyone, I'm Russ,
And I'm Giles.
and we are the Morrison Mortgage team. And this is just a quick update for you on today, Wednesday, April 12th. The Bank of Canada has held their rate once again. They have not adjusted or increased or decreased their rate at this point in time. And that means that all of our payments, etc., all the rates will hold tight for the time being on the variable side. As for the fixed side, we are seeing those come down a little bit. Now, a little bit more on the Bank of Canada prime rate. Giles, what are we seeing on that? So we've heard from the government. What is the word that they're saying from what is the government telling us, or the Bank of Canada?
Yeah, so the Bank of Canada is saying essentially things are heading in the direction they wanted with the prime rate. So, not the prime rate, with the inflation levels. So the inflation levels are still coming down. They are still wanting to keep rates at this level for a while. So the effects are still filtering through the economy, but they feel no further increases are needed to have those effects because we're still experiencing the effects of the previous rate increases. So essentially things are doing what they wanted, and they're happy to hold things where they are.
Yeah, and that's what we're kind of thinking is the articles we're reading and the research we're doing is that we're anticipating it. We could see prime rate is probably going to stay where it is for, I'm going to say, till the better part of this year. Some people are saying, or some economists are saying, that we could see a decrease maybe in October, November, but that's to be determined. Okay, so things are heading in the right direction. Okay, now the real estate market. What is happening in the real estate market right now?
Yeah, so it's definitely an interesting time in the real estate market. There still feels like there's not as much supply. So the condo market, a lot of the purchases we're seeing seem to be in the condo market, possibly because they're a little bit more affordable. But yeah, in a lot of markets there are still multiple offers. It still is competitive out there. But we're also seeing some further out markets, such as your kind of Chilliwack and Maple Ridge and Mission, more inventory coming out in the further out market as well.
Yeah, and in addition to that is we have seen a lot of more people kind of step off the sidelines and begin to kind of look at, well, what do I qualify for? What's the market like? We've had more activity on that, especially in the past 2 to 4 weeks. People are starting to come out and they're starting to look again, because I think, at this point in time is, the word is, or the thought process is that we have lack of inventory. We're getting back into some of the files that we're working on right now for our clients. They've gotten into multiple offers. So, is this going to push prices back up a little bit? Are we at the bottom? We don't know, but lack of inventory is certainly making things quite competitive out there. So, and lastly is rates. Now, we've had a lot of people, inquire with us. It looks as though we're at the peak of the variables at this point in time. So it should ideally only get better from here in the months to come. If there's anyone that's having challenges, if you're coming up for renewal, the game plan that you have right now moving forward is really important. We are recommending more of the shorter term rates versus the longer term rates, like a 5-year. So we are looking at strategically putting people in the shorter term rates. Now, why are we doing that, Charles?
Yeah, so the shorter term fixed rates are significantly lower than the variables right now. So there's a spread of in most cases over 1%. So with the predictions, yes, rates will come down at some point in the future, but with those shorter terms, you should still be in a position where you have a bit of security, knowing what your payments will be, and also that those shorter terms are short enough that even if rates do come back down, you won't be in that locked into that rate for too much longer. Yeah,
if we took a 5-year term right now up here, and then rates, came down significantly in the next 2 years, which they're anticipated to, is that penalty to get out of that longer term product would be very high, because the current rates at that point in time when you pay it out are going to be quite a bit lower. So we have an interest rate differential penalty. So if you have questions, if you're concerned about anything, or just need to reach out and chat, please let us know. Pop us an email, give us a call, and we are happy to help. So happy spring, and we will see you again soon.
Thanks.